The Indian rupee hit an all-time low against the US dollar. $1 was worth 85 rupees today.
The Indian rupee fell to a new low against the dollar on Thursday.
Rupee falls to a new low, the 86 per dollar mark for the first time, and hitting levels as low as 86.50.
Let's say $100,000 from a US-based FII fund comes into India, and when the rupee is priced at about 80 rupees, all right? Now that $100,000 grows by 12%, which invariably makes it about $112,000. But a year later, a cost of $1 becomes 85 rupees. The 12% return is obviously not going to be 12% anymore. It's going to be reduced, and more importantly, that person has to pay 5 more rupees more to take back dollars. And that's one of the main reasons, and that's what's happening in the markets right now. FIIs are pulling the trigger, are pulling the plug, and withdrawing funds from the Indian stock market back to their home country, wherever it is. And that's why our markets also are reacting in a way that it's going down. Now I'll tell you the flip side of it as well. In the US, even their markets are going down, and primarily 2 reasons for it. Number one, they have a huge debt situation, and that debt situation has to be solved. And the only way to solve it, as per the Trump administration, is to increase tariffs. Now, ladies and gentlemen, boys and girls, look around Bangalore, Delhi, any other city. There are a lot of multinational companies there, and they're mainly American companies as well. When I say multinational, I also mean American companies. Now, when you impose a tariff on another country, say for example, America imposes tariffs on India, it affects American companies as well. If America imposes tariffs on Canada, Mexico, or any other country, it affects their businesses primarily. Now, the tariff rates that are being discussed are 25%, 30%, 50%. A lot of things are being discussed right now. They're still yet to be negotiated and yet to see. But when this happens, the markets, being a sentimental force as it is, they react to it with fear. They react to it negatively. And that's why there's a huge selling pressure that is created in all these markets. And when selling pressure is created in one market, it trickles down to every market. And that's when the most stable instrument that people have known for eons of years together gets back the traction. And that's the reason why gold is going up, whereas stock market, crypto markets are going down. This is my opinion of what's happening in the world today. Now, do we need to be worried about it? Does that mean the Indian market is going down, Indian economy is down, blah, 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 blah? Well, the reality is this. If you're a newbie investor, you are actually getting an opportunity to buy stocks at a discounted price. If you are already invested into it, relax. And if you have some money left, you can actually invest again, looking at it that you might get it at a discounted price again. Because once an FII goes back, he has to come back to India as well. Because whether it's a 6% return or a 12% return or anything, return is a return. So they will obviously come back. When they come back, the markets will again go up. So this is a cycle. It will happen, irrespective of whether we like it or not. And remember, the United States of America has not yet started quantitative easing. As in, they're still tightening the screws on their interest rates. And if interest rates start going down, there is more liquidity available. And when there's more liquidity available, that's when the stock markets start booming up, because there's a lot more money available to be invested. So this is what's happening today. And it might happen for a lot more time. And maybe once in 1 month or once in 2 months, I'll come back with another opinion on what is happening and what might be the future of the market situation at least. Anyway, until then, this is Rohit Kurpad signing off from another video on the Indian Millennials channel. Take care, stay safely invested, and until next time, goodbye.